0. Welcome SMF MMT. Here it is. There's that 200-day reversal on the S&P 500 index. We got above it. That's classified a daily reversal. Doesn't matter that it's New Year's or not. They walked this tape up in 5 days, right where, and we got right above there. And the confirmation starts here, and it starts now, and it starts. That's a reversal on the S&P 500. Another one that we're going to be looking at is the Dow Jones, and it too has a daily reversal. Walk it up, got that little doji, got that gap down below it. That's what you're looking for. That's what we've been talking about. Hey, you're down 145 handles on light volume. You went up on light volume, and you're going down on light volume. The key to it is, my friends, is how the new year starts. Get signed up with us so that we can show you. Here, NASDAQ Composite. Look at that. It too got right up to that 100-day moving average, that 40-day and 20-day moving averages, as it did, and then it come right down. Okay, but look how they walked it during the great Christmas season. It was wonderful, the one that we are just passing by us. And here is the day selling. Narrow ranges. When you get up at top, price action get narrow ranges. And remember, as we have said, there's going to be great bull rallies and bear rallies in 2012. And that we promise. Okay? And the thing about that is, they're coming in a matter of days. Today is 12/28/2011. As we wind down this short day, which is a nice day, one thing that we would be like to be clear on is how we had talked about getting those put options on that S&P and that NASDAQ 100. And you can see the fruits and the highlights when they marked that thing down the other day. That's just pass number 1. There'll be another pass and volatility. Well, they'll mark them down again, and we'll get some more entries. Right now will be time to be selling into these up at the highs. The high is 4070. The thing about it is, you got a 4220 by 4150. That's a 2250 put on this wonderful chart that I'm going to show you, called the NASDAQ 100 reversal right into the key moving averages, and down here is going to be support. But here, let's let you have a little bit better view here of why we were saying in the very shorter macro time that light volume up move had to have a reversal to it, and this is the beginning of it. And yes, what I can say is 2012 and 2011 are going to be great rallies, going to be great bear runs, going to be great bull runs, going to be both. And earnings are coming down a little bit. Look, it doesn't really matter. We could care less what everyone's thought patterns are out there as to what it should be. We just take the directional movement, and that we were overbought in our system. We came right up here where we talked about this over the holiday. We talked about it coming up and testing 1300 as it did. We have all the live training analysis. That's where we would look at buying. That was that 100-day moving average. That's a reversal. And we hit our target. When we were featuring this, we were still way over here at 2287. We came up, we hit that 2300 trend line, like bam, and then bam, there it is. Selling below that 200-day simple moving average. Selling below that 20-day, the red one. The dark blue is a 40-day simple, and the white one is that 50-day simple moving averages. You'll have support down here, okay, during the holiday chop shop. However, markets are going to have to deal with what we call collateral liquidation. That means that equities will have to be sold to where that we can buy them very cheap. And once those people get out of the market in 2012, we could see it as early as starting January, but it will be a process that will happen in the first 3 months of 2012. And that's when, you know, once again, that's where the markets will go down. Earnings adjustments, estimates have to come down. Everything needs to come down to a lower GDP growth, which is fine. So you bring the earnings down, growth is down, but it's not the end of the world. And, you know, we'll be taking advantage of 2012 both the bear market and, most importantly, the bull market that everyone only understands the bull side of things. We understand the bear side of things and the bull side. It really doesn't matter. Public opinion is public opinion. Directional price movement in the direction of the market doesn't have an opinion. This is the update on 12/28 going into the closing bell. You have a low volume distribution, and you still have the end of the week, and Happy New Year to everyone. Really, from the deepest of my heart, is that you don't get caught at the top, but you learn risk management. You learn that you can make money when things go this way, and days like today, you can make money when things go up and pull back and are strong and go up. Eventually, they have to have a selling day as of today. This is just the beginning level, back to that 2250 support level, which let us not forget. Let us not forget that on stockmarketfunding.com during the Christmas week and whatnot, we marked this market down yesterday to 2730. And that was a wholesale entry. And we did those live videos yesterday on marking it down, then marking it up. And we'll be going in depth. I've given the update on the 2011 12/28 daily reversal bar, breaking daily moving averages on that NASDAQ 100. Let it be known. And just remember that our system told us that there was a lot of cautionary for the bull side, and that the bear side was, well, you would be taking the other side of that bull, and you would get paid on the other side of that bull thinking. And just at times when we're way down here, we get paid on the other side of that the way the bear thinks. Who cares which way they think? They both have valid cases. Sure, they're valid on both sides. However, we make a market between the public, and this is the beginning of the reversal on the NASDAQ comp, NASDAQ 100. Here's that NASDAQ comp. Didn't even make it up to the 200-day moving average. Over here, at least we tested it. But let's see how the big boys are when they come back off the holiday. Dow Jones, once again, Doji, that's that reversal. These are your support levels down here, because the daily moving averages will give it support in the beginning. They always do on the first pass of things. On moving averages, they get support. What will end up happening, if they don't bounce on support, they'll sell down to the next ones that have more weighting. The 100-day, the 200-day on this Dow has a better looking chart than the rest of them, because you got rising moving averages going up. It's much stronger, but there's only 30 stocks in here. Okay, we'll be covering all the sectors and all the indices, and that's S&P once again, just to recap, below the 200-day moving average. It'll act as a great trampoline of support down in here. However, let us be advised though that if you sell through the moving average just a little bit, then selling increases, just like they go up above the moving averages over here, and we held them. See how that held here? See how these lines are called moving averages? See how they're rising in value? That gave it even more strength to that reversal. All right, and this was a 1-day, a 2-day, a 3-day, a 4-day, a 5-day to a narrow range stop, meaning that it was going to take a lot to get the Dow through there. It was very indecisive between buyer and sellers, but it's always confirmed the following day. Now, when you sell through a moving average, it would look like this green line, the 200-day. You see how the body of the candle selling through it? Well, that's what happens when they break the moving averages, and we'll take a look at what the short-term percent level below that 200-day moving average is right now on the S&P 500. So we're going to be watching this one, unlike the Dow. They're identical looking. You can see them, except this one's much stronger. The S&P back here on the daily, this S&P, that's the one that's selling through the 200-day.